per coin.
And how do you compute that?
Yep, let's get to that. So the way that you would look at, say, a Silicon Valley investment, if I was pitching you on Uber, 15, 20 years ago in Silicon Valley, I'd say, hey, Robert, I have this way to call a ride from your phone. You're like, oh, like a taxi? I'm like, yeah, like a taxi, but it's better. It's more convenient. It's Uber. You're like, okay, Mark, how much is it worth? I say 100 million. You're like, what? Where'd you get 100 million? Well, Robert, the taxi industry is this big. The limo industry is this big. The van share is this big. If I get 5 or 10% of those, I get to 100 million. So that's sort of the way that you look at the markets is disrupting. So Bitcoin is going to be a lot of things more than what we know, but what we do know today, it's competing as a store of value.
Correct.
So it's competing against value itself. So what are the store of value assets? Gold. We have about 14 trillion. Goldman Sachs, JP Morgan, they've put out guidance that it will overtake gold at some point. So that's about 14 trillion. We know that also rich people store their wealth in cars, fine art,
Stocks.
collectibles, things like that, and that's about 25 trillion right there. We know that people store their wealth not in dollars but in the stock market, 120 trillion there. We know that people store their wealth, their value in real estate. There's about 350 trillion there. We know that people store their wealth in bonds. There's 300 trillion there. We know people store their wealth, some of them in fiat, about 120 trillion there, and we know people store them in offshore bank accounts. There's about 30 to 40 trillion there.